Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 12th of October. I'm Phil Carroll.
And I'm Kevin Hornsby.
International Hispanic Day today. Anyone feeling slightly Spanish, Mexican, maybe a Mexican tonight, Kev?
Viva España, or Mexico, sorry. I was actually at a Mexican party in Cairo a few days ago.
Oh, really?
Because there was a Mexican missions team over from Mexico, and they put on a whole night, so we were dancing, and they made us these tacos, homemade tacos, soft tacos with the meat and the, what do they call the onion, tomato, and chili thing that they have?
The salsa.
It's called salsa, but I think it's called pico or something or other.
Yeah.
And they'd made the avocado dip as well, as you do, and it was absolutely fantastic. It was amazing. So
Brilliant.
There you go.
Making me salivate. So, I mean, how's your week been? I know you've been doing a few touristy things there in Giza, but what is going on in your life? I mean, how do you feel the markets have been this week?
Markets have been flying, haven't they? As I said you'll hear it in the interview with Rick. I just feel like a few splashes of liquidity have been sprinkled on the UK market, and all of a sudden we've got 50% here, 100% here, 200% here in terms of returns. So yeah, I mean, I'm feeling very positive. The portfolio is looking a lot healthier, and we got to pick not necessarily the next ones, because I think the ones that are doing well have got a long way to run still. So 100%. It's as we've said all along, some you're into trade and some you think are gonna do the business. So as in going to 5-10 bags. So we will see. But it's exciting times, I think, and I think everybody should be positive.
Good. Let's have a look at the news stories that have dominated. And really, there's only one news story that's breaking on Friday, and that's that obviously Israel has approved Trump's plan for Gaza ceasefire and hostage release. Israel has approved the first phase of a Gaza deal, which will lead to a ceasefire and the release of hostages. Prime Minister Benjamin Netanyahu's office have said, and this is obviously breaking on the Friday morning. So what do you make of that? Trump's going to be bigging this one up, isn't he? He's going to be really, really
Hallelujah is what I say, and I suppose, I think Mr. Trump's going to be very close to me soon, because I think he's going to be jumping on the plane so that he gets his Nobel Peace Prize when all this.
I was going to say, do you think he'll get one? Because it's going to be announced today on Friday. So obviously, at the time we're recording this, we don't know. But I mean, there's every good chance that he will receive a Nobel Peace Prize.
I think it's very likely. I think he's been, politically and every other way, it's like, if he doesn't, Nobel laureate will be slagged off for the next 10 years. So, but he obviously has played a key role, and the Egyptian guys played a key role as well. Sisi, though much quieter than Trump, if you like, but we'll see. Let's just hope it all comes to fruition, and the hostages come out, and killing stops. More importantly, never mind about hostages. Whether Israelis, whether Palestinians, we need to stop killing people for the sake of whatever it happens to be that they're worrying about killing people. But let's hope. And there's going to be some sort of serious peace dividend. If you've seen some of the pictures of Gaza before and after, I saw some last night when I was on social media. It's unbelievable. It is being absolutely leveled. Everything.
Yeah, it's apocalyptic scenes for sure.
There's nothing left.
So let's move on to our special guest this week. We're delighted to welcome back Rick Rule, CEO of Rule Investment Media. Welcome back to the roast, Rick. How's life treating you?
Well, it would be very disingenuous for me to complain, thank you. My life in almost all regards is excellent, including the fact that for all of my sins, I've been invited back on the roast.
Perfect. That's very gracious of you. So, well, let's have a look. I mean, I obviously always like to start a little bit of the segment with a little bit of politics without going too deep. But how are things feeling in the US right now? You know, we've had this US government shutdown with the Republicans and congressional Democrats still at an impasse by the looks of it, and obviously the White House threatening to order mass layoffs of federal workers. Tensions between Trump and Democratic-led cities have escalated as well. Just how are things feeling out over there right now, Rick?
Well, if there was actually a government shutdown, which meant that if they shut down spending in addition to services, I'd be ecstatic. Nothing in the world would make me happier than shutting down the federal government. That's not what we have. We have a political dispute where the bills go forward, but the service has been suspended. It's very tough for me as a taxpayer to mourn too much about the fact that the IRS might furlough 40% of its workers. I think if the IRS did furlough 40% of its workers and taxes became uncollectible, that the United States would experience a boom, the likes of which the world has never seen. But a government shutdown is not what we have. We have a policy dispute between two rival mafias, the Democrat mafia and the Republican mafia. So I think it's important to set the stage straight. In terms of how the country's working, mostly, mercifully, despite the theatrics that you see, life goes on. We go to stores, we buy, we go to work, some of us work. We read all kinds of screaming headlines. And I think it's instructional to note that in the last election cycle, almost as many people didn't vote as did vote. So while this issue is of critical importance to those people who subscribe to the religion called Republican or subscribe to the religion called Democrat, that part of the culture wars is very much alive. There is a subset of Americans who go to work, pay taxes, in effect cause the country to function, and they are mercifully less connected to the drama than the politicians. As I say, there's nothing that I would like quite so much as a government shutdown. There is much about the current administration that absolutely traumatizes me. But I could say the same thing for the Biden administration. As for the misinformation that's being spewed, I'm reminded of the H.L. Mencken quote that you can ascertain when a politician is lying. That's when their lips are moving. I hope that suffices for an overview of American politics from a libertarian perspective.
Very good. In a nutshell, yeah. And then obviously, you know, last time you were on, we were talking about values of precious metals. We saw gold punch through the $4,000 per ounce. You know, it's a number that a lot of people said it wouldn't pass through, but obviously we've talked about it passing that. We've seen silver pass through the $50, which is incredible. You know, shutdown jitters, as you've just said, looming Fed cuts. Last time you told us how gold would mirror fiat debasement. Do you think that timeline has accelerated? And you know, and if so, what is the highest conviction way to own it now? Is it bullion? Is it royalties? Is it cash-rich producers? What are you looking at right now?
Well, you asked me a whole bunch of questions there, so let's try to answer them in reverse order while I can still remember them. In terms of the highest conviction form of ownership, it depends on what type of investor you are and what part of your portfolio you're trying to address. Although a rational financial planner or accountant would tell me, given my shareholdings in Sprott, that I shouldn't own any gold, I do. I personally save in gold and I maintain liquidity in US dollars. That has proven over 25 years actually to be a pretty good strategy for me. So for that portion of your portfolio that you would like safety in, that you would like to maintain your purchasing power in, the bullion, don't take operational risk. Don't own a second order asset. Own the primary asset. If what you're interested in is maintaining your purchasing power against a declining US dollar or a British pound, don't confuse yourself. Own gold. Whether you own gold physically or whether you own one of the gold surrogates, the Sprott Physical Gold Trust or, you know, the Perth Mint Certificate or an ETF, matters less to me, but own gold. If you are an investor, in other words, if you are interested in investment style returns as opposed to savings or insurance style returns, own the best of the best gold stocks, the super high quality ones, the Wheaton Precious, the Franco-Nevada, the Agnico Eagle, ones where you have fortress-like balance sheets, you have 20-year track records of rational allocation of capital, and you have a growth pipeline for the next 5 years built in. In other words, don't confuse yourself seeking alpha. Try to participate in the outperformance of precious metals relative to other market types without exposing yourself to operational risk or financial risk. If you are a more aggressive investor, now is the time when you can, if you would like, come down the quality trail. Buying the best of the rest, the Lundin Golds, the Newmonts, the Kinrosses, the Alamos, very high quality companies with good pipelines, but not fortresses. What's happened in this bull market is that the money has come down the market cap scale and the risk scale much more quickly than it used to in the past. In the past, it took 2 years for the money to go from the best of the best to the penny dreadfuls. And this time it happened with lightning speed. Lightning speed. Participate in what I laughingly call the penny dreadfuls. If you are willing to work very hard, take risk, and endure volatility. Now, it's funny, if my wife were down here listening to me say this, she would laugh and tell your assembled audience, all of the money that Rick now invests carefully and cautiously, he made by speculating wildly. So I'm not suggesting to people that they don't pay attention to the bottom end of the value curve or the risk curve. That's where I made the money that I now invest. But I would caution people that I worked very hard and I got very lucky. So unless you are prepared to work hard enough to get lucky, stay out of that sector.
Yeah, I like that. I like that a lot. And you also said I'd be very, very surprised if the purchasing power of the US dollar didn't decline by 75% over 10 years. I mean, the last time you warned of that 75% dollar purchasing power decline over a decade, has anything changed in that sort of that statement since July, and what would invalidate it?
It's higher. It's higher. It's a higher conviction now. The impasse in the US government has nothing to do with reducing debt or deficits. It has nothing to do with curtailing spending. It has everything to do with who will be the beneficiary of the spending. Again, to quote H.L. Mencken, elections are best described as advanced auctions of stolen property. And what's happening in Washington right now reinforces rather than challenges my conviction. On top of that, the politics of tariffs. While they're popular among protectionists, what tariffs are is taxes. And the U.S. is not an undertaxed society. The idea that if we put a tariff, as an example, on Canadian aluminum, that the Canadian aluminum producers pay the tariff is insane. The people who buy the product pay the tariff. So in answer to your headline question, the theater that we're enduring in the United States and Washington, and by the way, the theater that you all are enduring in London, which is equally asinine, reinforces my conviction that the purchasing power of the US dollar will decline. The theater is what gets your attention, but my conviction is all about arithmetic, which we did the last time we talked. The on-balance sheet liabilities of the U.S. government exceed $37 trillion a year. We propose to service that with gross federal revenue of $5 trillion a year. But it gets much worse. The net present value of off-balance sheet liabilities in the United States, Medicare, Medicaid, Social Security, net present value, not nominal value, net present value, exceeds $120 trillion. So if we owe $150 trillion at the federal level, and oh, by the way, that number increases by $2 trillion a year on balance sheet and $2 trillion a year off balance sheet, and we propose to service that debt with $5 trillion in income, you can see the problem with the arithmetic. America faces two choices: an honest default, the Argentine method, where we say to the bondholders, yeah, we know we borrowed it. We know we promised to pay it back. You know it's unsecured and we have nuclear weapons. Too bad, so sad. You don't get paid. And we say to the old codgers, the Rick Rules of the world, yeah, you paid in for 60 years. So what? The money's gone. You aren't getting your benefits. Old folks vote. So it's unlikely they'll be able to pull that off. What I think they do is they do a dishonest default. In other words, they continue to pay this old codger, whatever it is they pay me in Social Security. I don't even know. But they pay me in dollars where the purchasing power declines by 75%. In other words, if I'm getting $4,000 now, 10 years from now, that $4,000 will buy me $1,000 worth of goods and services. And they will not index capital gains or income taxes to inflation. So their revenue line swells while their expenditure line stays constrained. Past is prologue here. We did precisely that in the decade of the 70s. Precisely that. You don't have to take my word for it. The Office of Management and Budget, the predecessor to the Congressional Budget Office, says that in the decade 1970 to 1980, the purchasing power of the US dollar declined by 75%. Not coincidentally, the gold price increased 30-fold. I'm not suggesting that the gold price is going to increase 30-fold. It's already increased 12-fold. But as I said 90 days ago, I would be surprised if the nominal price of gold, the US dollar price of gold, or the pound sterling price of gold, didn't increase in a measure that mirrors the decrease in the purchasing power of fiat currencies.
So, Rick, when are we getting $10,000 gold?
I don't know.
And the reality of that question is that doesn't mean necessarily gold is more valuable, but basically the devaluation of the dollar against probably every currency and also asset in the world
it maintains its purchasing power. But this isn't logarithmic. This isn't stair steps to heaven. Your listeners who get excited by what I just said should recall, although most of them weren't born, that in the bull market of the 70s, when the gold price increased in US dollar terms from $35 to $850, in the middle of that epic run in 1975, the gold price declined from $200 US to $100 US, a 50% decline in 9 months. And by the way, the decline was steeper for the gold stocks. There were a whole bunch of people in 1975, I was around for it, who, having witnessed the move in gold from $35 to $200, were real adherents to the gold narrative. And when gold declined from $200 to $100, their faith evaporated. They got shaken out in the bottom just in time to move to enjoy a move in gold from $100 to $850. So people who listen to me say that I think that the gold price will increase in 10 years, threefold or fourfold, need to understand it would be perfectly within historical bounds to see a 50% decline in the price and more in the equities at some point in time during that run.
Yeah, and I think possibly quite likely. The only thing I'd say to you is in the difference between now and the 70s, I feel it would happen a lot quicker. And the rebound would also happen a lot quicker, partially because of the electric trading, partly because just the speed of money is much faster. So, yeah, I mean, it's possible for sure.
I think I agree with that. I think that the rapidity in this market, where the money has flowed down market, suggests that what you say is true. I think another reason for that is that the U.S. market in particular, well, the British market too in the 1970s was extremely insular. Funds flows were national. Fund flows are international now. And it isn't merely the fondness or lack of fondness expressed by U.S. investors that moves the U.S. gold markets. The Chinese move the markets, the Indians move the market.
Yeah.
Markets are much, much, much more international. And although I would suggest to you that on a global basis, governments are insolvent, people are very liquid. There's a lot of
Yeah.
cash on the sidelines. It's just that that cash isn't a place that's particularly convenient for politicians to steal. But it's that private liquidity that drives markets. This public insolvency doesn't extend to private people yet.
Well, I think from a government perspective, we have well, maybe not quite a few, but we have a number of countries that are extremely solvent. And then we have a number of countries that really are bankrupt, regardless of whether. And then we have a whole plethora in the middle that, if they were a publicly listed company, they would be bust. But because of beautiful accounting, they're not. So, the whole macro side of things says gold is going higher. Goldman Sachs, I think it was, said 4,900 gold now. Well, it doesn't take a rocket scientist when it's already gone up that much to say another 20% on top of it. But all of these things, what we're most excited about, or I am personally, is that we're starting to get drops of liquidity from US markets coming into London. And that is making those shares, go parabolic, basically, in terms of what we've seen in the last 2 or 3 years before that. We've got Guardian Metal is now up, I think it's up about 15 times in a year and a half. Power Metal, sadly, is stubborn and won't move. We have another one called Bazant, which we talked about on a previous thing, which is in Namibia, gold, and going to become a producer in the next number of months. So without naming stocks, I think there are some gems out there in the small cap that are going to be close to becoming producers. And I can't see that they're not going to make absolute fortunes.
I think you're right if you say that there are gems out there. I continue to believe that the listed junior section worldwide, taken as a whole, is valueless. If you merged every junior on the planet, every junior mining company on the planet into one company, Junior Explorer Co., that company would, in a very good year, lose $2 billion. In a bad year, it would lose $10 billion. So one needs to ask oneself about the gross arithmetic, just like in gold. How much do you pay for the right to lose $2 billion a year? Should you price that company at 8 times losses or 12 times losses? Or when it was popular, 15 times losses? You need to have the education and the discipline to select in the junior market that 10% of the companies that have any value whatsoever. I think you understand this, but your audience tends to become ebullient when they see some juniors increase in price threefold or the index double.
But I think in London, especially in London, because we have literally gone through the desert years in the last 3 years, and maybe it's been much worse in the past as well, that what has actually managed to survive are the ones that actually potentially have something going for them. And if you drop in an element of liquidity, almost like when you're doing your experiments in chemistry, like a pipette of water on top of them in terms of liquidity, because they have an asset, they've kept this asset, they've tried to progress this asset. Now they've got the opportunity not just to explore, but to actually turn themselves into a producer, especially in the copper market. I'm very excited about the copper market simply because we're going to have this big gap. It's coming. And the big copper producers are just not going to be able to keep pace with it. So we're going to have lots of small ones. I just don't see another way around it. I think this is, to have 200,000 tons of contained copper, 500,000 to contain copper in these businesses, they're going to be like little gold mines, even though they're copper mines.
I like the copper business. My former point, I think, goes unchallenged. I would invite you to come into the real classroom and discuss companies that you think are selling at a discount to what they're worth. When people talk about the fact that share prices go up, what they're talking about is stock to float and the fact that they suddenly have a bid. The asks have been worn out. The asks have gone to ask heaven. The people who want to sell have already sold their stock over 5 years, and the buyers come into a vacuum. That's a different discussion than what these things are worth. You mentioned a stock that's up 15 times in price. I would caution the listener that if there hadn't been a fundamental improvement in the underlying business, what that means is that the issuer is precisely 15 times less attractive on a price to value basis than it was before the price went up. And I think it's necessary in times like these when everybody is so excited that they think they can drink 20 beers without getting drunk, that they reorganize their focus and think about how bad they felt the last time they grievously overpaid because they were excited. I, in fact, have been fairly public about the fact that in the speculative part of my portfolio, which mercifully is fairly large, I am in the process of reducing that portfolio as we speak by 25%. I'm doing it because I can sell off 25% of the portfolio, which is to say I can sell off 25% of my upside and recapture all the money I put in the sector for the last 5 years. By selling off 25% of my upside, I can eliminate my downside. When I have a big position for free, I suddenly become very, very patient. The point of that soliloquy is I agree with you in terms of the market direction, but I would caution your listeners who become too excited that they need to be extremely selective with regards to stock selection because 90% of the issuers have no value. It doesn't mean they won't go up in price. Something that goes up in price in the near term just means there's more buyers than sellers. You know, H.L. Mencken one more time and Buffett one more time. The market in the near term is a voting machine. In the long term, it's a weighing machine. And I don't vote.
Charles, what's the name of that guy that's come into GMET?
What guy?
Golden Metal Machine. The American guy.
Stanley Druckenmiller. His fund.
Okay, so that's the one that's gone up 15 pence. Stanley Druckenmiller's come in
15 times.
Gone up 15 times. And since he's come in, it's gone up over 120%. So that's what I was saying in terms of the drops of liquidity into the UK market. You know, we're starting to see it now in the gems, and I believe that this is one of the gems. But yeah,
if you confine your discussion to the gems, you and I agree. My difficulty is that I'm starting to see euphoria in discussions like this across the length and breadth of the junior market, and the junior market, taken as a whole, is valueless.
But okay, when you say something, the junior market is valueless, you look at the U.S. government. You know, you can say deposits are valueless, or say the U.S. government are not particularly intelligent with the way they spend money, and that goes with Europe and Australia. No comment there, maybe. We all know you love big government.
No government spends money well. I suspect, frankly, that the U.S. dollar, in a relative sense, will do okay against the rest of the world's currencies. As Doug Casey says, the U.S. dollar is the prettiest mare at the slaughterhouse. I think that the U.S. dollar declines by 75% in an absolute sense, not 75% relative to the British pound or the euro. I think it's important that people understand that government idiocy is a universal phenomenon, not limited to the United States. We focus on the United States because our theater is so broad, and sadly, we're so powerful. And I get the point. Comparing gold or the junior market to the U.S. government, I would only caution you this. The private sector is more efficient than the public sector in every circumstance, including counterfeiting. The Canadian dealer network can print more phony share certificates than the U.S. government can phony dollars. And investors and savers need to guard themselves against profligacy, whether or not it occurs in the city or in government.
But what are your thoughts of the US government taking a stake in MP Materials and, you know, planning to take stakes in various other companies? I imagine you think it's a disaster idea.
Idiocy, total idiocy.
But China has been doing the same for decades.
You know, the U.S. capital markets are very robust.
Hmm.
We have a lot of smart investors. I would semi-respectfully tell our president that I have much more experience in natural resource investing than he does. And I have no interest in him allocating my capital. Uh, Unlike the US federal government, my budget is in surplus. I have proven myself to be a better investor than my government. And furthermore, I have to convince my customers to buy my product. He coerces his customers. The idea that he's going to invest my money in a mine that has been bankrupt 3 times in my life, that is in the worst quartile in the world cost curve in the materials that it produces, and has a negative return on capital employed going back 35 years, I can waste my own money. I don't need him to waste my money.
But okay, so let's phrase this another way, because I agree with you, by the way, in many ways. But China has a huge control over the processing power of critical minerals. China and the US are getting closer and closer, if not a hot war, maybe a cold war, maybe we're already in one. Does the US need to invest through the government in critical minerals? And if so, what would be the way to do it then? Can you be in charge of it? That would be
The
fantastic.
first question is no, which obviates the second.
Oh, fair. Okay.
What the US government needs to do is get out of the way. Just get out of the way and let the private sector do it. For instance, if you and I, Charles, were to build a minerals processing plant in the United States, a big one, a world scale one like the Chinese.
Yeah.
The building that we would build, a tilt-up concrete building in the United States, would be depreciated for taxes over 33 years, 3% compounded over 33 years. In China, it would be expensed. Now, which country would investors with an IQ north of 50 prefer to build a processing plant in? Mr. Trump doesn't need to impose tariffs. He doesn't need to waste my wealth. He needs to reform the US tax code so that it becomes investment centric. Did you know that in socialist Sweden, if you and I built that factory, socialist Sweden, we could also expense it. In capitalist US, we amortize that building over 33 years. Another thing we could do, there's a wonderful copper deposit in the United States called Resolution, well over 1 billion tons, 1.5% copper. That's 3 times the average mine grade worldwide. And it's in a spectacular location. On both sides of it are copper mines, a really good thing if you're in the copper mine business. There's highways, there's power, there's rail, there's water, and there's a town right next to it full of copper miners. It doesn't get better than this. That mine has been in permitting for 28 years. 28 years.
Rick, you said 26 years 2 years ago and 27 years 1 year ago.
Yeah, I know.
It's funny how that math works, right? Funny how that math works. Does Mr. Trump need to steal my money to invest it in a deposit that's gone broke 3 times in my lifetime? Or does he need to reform US permitting and the US tax code? I'll leave that question with you. The mining industry loves the fact that they can now wallow up to the trough and eat taxpayer dollars.
Yeah.
You heard it from Rick Rule. Within 10 years, we will rue the day that we allowed those bastards to establish a deeper nexus in our business.
I agree. But do you know, it's funny because I speak to people all the time about this. Basically, how can we challenge China with processing? And I'm sure you have these conversations as well. This is the first time anybody's ever given me an answer which isn't throw money at it. Isn't that funny?
Of course, it's my money they're throwing at me. I would rather they just left it with me to begin with. I'm perfectly comfortable and competent to analyze a proposal to build a rare earths processing facility, if that's what's required. I think with all humility that I would do a better job than President Trump.
Okay, and then the next question is, this is a bit out there, but gold is going to record highs, as is silver. The US dollar is devaluing. Back in 1933, because I know you enjoy history, President Roosevelt, Executive Order 6102, effectively stole all of the gold off Americans and gave them whatever dollars he felt it was worth, and then revalued it a year or two later. Yeah. Do you think there's a chance that something similar could happen, or do you think in today's world it's impossible? Because I sit here and looking at the dollar and I just think, what is the way to fix this crisis?
If the today's world that you're speaking about is 2025 or 2026, the answer to that is no. There are easier ways for them to steal. Inflation is theft. Constraining how you can invest your IRA is theft. Taxation is theft. Artificially low interest rates, all those things are theft. If they came to steal Americans' gold again, they need to remember, and they know, that there are 400 million guns in private circulation in the US. Overt theft like that is risky now. If, by contrast, they artificially lowered the interest rate, if they raise taxes on the rich, remember that 50% of American citizenry are net beneficiaries as opposed to payors in the government scheme. They're popular. They're exalted. If they come to steal the gold, it's not unlikely they'd be shot. Let's assume now that you're a senator. Would you prefer to be exalted or shot? 10 years from now, that circumstance may change. 10 years from now, if gold ownership is concentrated on the upper 1 or 2% of the American populace, and 90% of the populace couldn't spell gold, there may be much more political pressure to steal private wealth. It's worthy to note that Americans who saw the writing on the wall pre-1933, some of that gold mysteriously found its way to Britain or Canada. And it's likely that some of that gold that found its way to Canada remained in American hands. I myself emigrated to Canada before private ownership of gold was legalized in the United States. And there was a whole business in Canada of safe deposit boxes. And the owners of those safe deposit boxes, I would suggest by the license plates in front of the establishment, were largely American. And I don't suspect that the contents of those safe deposit boxes were things like passports. I suspect that they were gold.
Okay, one of your statements, Rick, from last time was, I'm delighted when others make money. I'm not infected by FOMO and don't go where I don't have an edge. So, I mean, obviously, we've seen Bitcoin punch through $121,000, which is incredible. Has the last few months changed your willingness to own any crypto proxies or any Bitcoin treasury stocks, or is your edge still squarely in the sort of resource sector?
Yeah, I mean, I've invested what is for me a bit of money. Unlike Trump, I don't have access to the U.S. Treasury. But in terms of my own treasury, I've invested a reasonable sum of money in technologies around the facilitation of precious metals ownership in stable coins and other circumstances like that. I have absolutely no interest in participating in businesses that I don't understand. I was born in Silicon Valley. A couple of my mates from Silicon Valley were around for the formation of Apple. Suffice it to say, they did extraordinarily well. And I wish them well. But despite being born in Silicon Valley and having access to some of the real superstars of Silicon Valley, I have zero interest in technology because I don't understand it. I recently learned, I think, how to pronounce NVIDIA. But the fact that I know how to pronounce it...
Kev still can't pronounce NVIDIA, I don't think.
Well, maybe I got it wrong.
Yeah.
I tried to do it phonetically. But the point of all this is, despite the fact that it's done extraordinarily well, I don't care. That's not what I do. I do natural resources and conventional financial services. And for somebody of my means and needs, that's more than enough opportunity and more than enough risk. The idea that I would step out of my comfort zone is crazy. is absolutely positively crazy. And frankly, most of the money that I've seen lost in my life has been lost by people who chased opportunities, if that's the right phrase, that they had no ability to analyze at all.
Understand the stock, basically, understand the technology or something, because that makes sense. You also said that small minds make you small money, big minds make you big money. So if you apply that lens today, which commodities, geographies do you think still offer these tier one odds, where you said that the downside is 100%, but the upside is maybe 10 to 20 times?
Well, as you know, I'm attracted to countries that exhibit what is believed to be more political risk than others. I believe that the most dangerous government is the government closest to you. Foreign governments generally don't know that you exist, and so they're much less likely to oppress you than your own government. The other thing is that I believe that the entire political process is corrupt. That people, let's just be frank, people who look like you and I and speak like you and I seem to believe that risks imposed on us by darker-skinned people who don't speak English, not according to the rule of law, are somehow greater. The truth is that money stolen from you in English by white people, according to the rule of law, is just as gone as money stolen by more traditional methods. My greatest experience with political risk in my life, my actual experience, money lost, was in the People's Republic of California, where I was at the time resident. Conversely, the greatest successes that I have had, cash in and cash out, by far were Congo and Sudan, respectively. So I think that you need to put political risk in context. Would I prefer a high quality deposit in a political jurisdiction where the sociology was pro-free market and pro-mining with great infrastructure? Of course. That's like saying, when I was 22, would I like a nasty weekend with 3 models from Victoria's Secret? Neither were on offer, right? There are some mediums. I've done extraordinarily well in Western Australia for 40 years. I've done extraordinarily well in Chile for 40 years, although Chile is certainly backsliding, well, as is Western Australia. But I tend, personally, and I think you guys do too, I tend to go to, as an example, Africa. And that isn't to say I haven't been punished in Africa. What happened in South Africa 15 years ago, what's happening in Mali today, certainly is a manifestation of political risk. But that's happened to me in British Columbia, Alberta, California, Arizona, Idaho, Washington State. The same risks that we face in Africa, we face in developed countries where the methodology of theft is more sophisticated. Ask yourself this, Phil. Is a campaign contribution a bribe?
Yeah, obviously a campaign contribution. If you're paying money towards it, 100%.
What Mr. Trump said before he became president is that when he gave a contribution to a politician, he always asked, is this check hello or goodbye?
Wow.
Paying for access.
I don't know. I mean, it's funny, isn't it? Because we talk about Africa as, if you look at the Fraser Institute, most of the African countries are close to the bottom. But if you want to get a mine up and running in Africa, you can do it pretty quickly, I would say. You want to do it in Canada or America, you could be waiting 28 years.
The Fraser Institute survey is a beauty contest.
Indeed.
It isn't empirical. They ask people their opinion. Now, if you're in Vancouver and you would prefer to fly to Williams Lake, 45 minutes away, as opposed to Accra, guess what you're going to say in a beauty contest?
Yeah. Well, I think it is funny though, because most of my best returns have come out of Africa. Most of my losses as well. I imagine that mirrors your experience. But I think it is worth noting, if you look at many of these African states like Zambia and its copper target, for example, or Zimbabwe or Namibia or Ghana or Cote d'Ivoire, many of them are very poor countries, and they desperately want the tax revenue. And I think this is where it becomes difficult because the money is made in dollars, in US dollars, which is worth more than their currency. You come in, you build the mine, and then you have to trust on that government not to change the rules or outright confiscate the asset just that it starts to make a bit of money. And that's where the difficulty lies. How much can you trust these governments? And obviously, the entire continent of Africa, different countries, every country is different. But I think if you look at Mali, for example, all of that money is sunk in by Barrick for the gold mines. How much of that money are they going to get out of it going forward? I'd imagine maybe not so much.
Well, remember, they've already gotten
A lot of it
substantially
back.
more out of it than they lost. When people talk about Mali, and by the way, I think the action of the Malian government is inexcusable. But when people think about Barrick's investment in Mali and they suggest that it was a huge mistake, remember how much money they've taken out of Mali already and reinvested. It's important that you take note of that. When I look at my own adventure in Russia, when I drove off the cliff with a fair amount of money. But the amount of money I lost is dwarfed by the amount of money I made in the 24 years before that. I think it's important that you put political risk in contract. I was just in Botswana 2 or 3 weeks ago, and I wouldn't purport to be an expert on Botswana, but I've invested there for a long time. I believe with the current government in Botswana and the current sociology of Botswana, this can change, of course. I would suggest that Botswana is a less risky jurisdiction for mining than any state jurisdiction in the United States.
Yeah.
The risk is different. If you go to Botswana and you're trying to achieve social license, what is of interest and importance to those people is different than what's of interest and importance to Canadians or Americans. And so obviously, you need to tailor your social license effort in local terms, which many North Americans and Europeans have been failures at. The other thing about Africa is that it is much, much, much less explored. And the probability of stumbling across a good deposit is higher in a place where people have done less stumbling. The idea that if you're a gold explorer, that you are going to walk across an outcropping deposit is low because a whole bunch of people already walked there and they were smart people. Where you find deposits in Nevada now, you have to do what Bristow and Barrick did at 4 Mile. You have to work 25 years undercover to be an overnight success. I remember personally, not the discovery, but rather the rediscovery of Tanke Fungarumi in Congo in 1996. I was there with the Lundins, and there were 2 different copper outcrops, Tanke and Fungarumi, hence the name Tanke Fungarumi. And they were defined by broad kill zones, so much copper that no vegetation lived there, and great big swaths of green that you could see from space.
Yeah, well, it's funny, isn't it? Because I've been out to Zambia, I've been out to Zimbabwe and Botswana, and the DRC once, but maybe not again. Too risky for me. But you literally walk over them. You can see the metal. Do you know? In other jurisdictions, you have to go drilling for it. Out there, you can see it on the surface. And yes, you want to drill for it to see how. But do you know how much de-risking there is visibly seeing the metal versus having to do all the the surveys and all the pre-drilling stuff? It's amazing,
and imagine too that if you take those trends to the west, the Zambian copper belt, the Katanga Sed-hosted copper belt, and you take them to the west underneath the Kalahari Sands, where you can't see them. In other words, you do what Robert Friedland did with Kamoa. He followed existing trends to the west, where rather than being able to walk across them, they were under 10 or 15 meters of cover. Yes, he had to take his surface samples with a rotary air blast tool. But if you look at the results of looking in Africa on known trends, in areas where they go undercover, nobody's done that. we've spent billions of dollars looking undercover in, as an example, Nevada or Western Australia. The success that remains to be had in Africa, in former conflict zones like the Ivory Coast that weren't looked at because it was too damn dangerous, or undercover. Another Friedland example would be the Flat Reef, 80 million ounces of PGM metals, where known trends plunged underground, where there wasn't a surface expression of the reef, but there was a geophysical expression. The idea that Robert followed those trends north, actually, I guess Hunter and Dickinson did first, where you couldn't literally wreck your truck on the surface expression of the reef, but rather had to drill for it. And the outcome was 80 million ounces. It speaks a lot to the prospectivity, I think, of Africa.
I think also when we're talking about different types of African countries, I think Namibia also sets itself apart. Botswana, I think you then go up the risk criteria, I think, to Zambia, and then you go up to the Congo. But the reality is that Congo is so rich in assets that maybe, as you said, the risk is worth it. I know that Charles has been looking at Rome Resources, which is the other tin play, but we've also been looking at Bazant, which is copper gold in Namibia, the Matchless Belt, I think it is, and they are. We've been to that one in Namibia and literally kicked the copper on the surface. The blue stones on the surface, which is just copper, obviously on surface. So rather than ask you which ones you would go to, which ones would you avoid in Africa?
There's no African country I would avoid. I think now that you need to understand that former French West Africa is in transition. And I think if you want to work in Mali or Chad or Burkina Faso, that the first thing that you have to do is go to those countries, and you have to establish connections with the local elites and find out from them what's acceptable. I personally would, in the present sociological circumstance, rather work in Namibia or Botswana. Personally, I would rather work there than work in the United States. I've become more than a little familiar with some of the local indigenous business people. Yeah. And I have a high degree of confidence that I could work with them. They're small political jurisdictions. They are political jurisdictions where there is a will on behalf of the populace to engage with the 21st century, something sadly lacking in the US. So I would be more familiar. But there is no country in Africa that I wouldn't go to if the size of the prize was attractive. I'm experiencing difficulties in places like Malawi. It isn't that there isn't goodwill, it's that they have so little experience with mining that they don't have the regulatory framework. They don't have the regulatory capacity. They don't say no to us, but they don't know how to say yes yet. This is a circumstance I faced a lot in my career. That's a challenge. You don't go to a country like that for a deposit with in situ valuations of $2 billion. You have to go to a country like that for a deposit with an in situ value of $20 billion. The reward has to be worth the risk.
Absolutely. Rick, let's talk a little bit. You referred to NVIDIA earlier on, and I want to just look at obviously their market cap now, which has just bust through $4.5 trillion. Yeah, I'll say that again, $4.5 trillion. And silver as a commodity effectively having a market cap of around 2.8 trillion. That's obviously an estimation. Given that NVIDIA's market cap is now trounces the entire global silver stock, does that shift your view on where speculative capital is going? I mean, I know you've talked about you won't invest in things you don't understand, but tech obviously is winning right now over the commodities.
Tech has delivered higher returns to investors, not just in share price escalation. I remember a discussion, 3 years ago or 4 years ago, comparing micro caps market cap relative to the mining sector, or Nvidia's market cap or Apple's market cap. And I pointed out to the questioner that unlike the mining business 3 years ago, those companies made money. I don't know that their valuations are real, but I do know that if you look at the mining industry as a whole, including all of the juniors, that for 40 years, the mining business has a record of wealth creation that's literally unblemished by success. So the prima facie contradiction between the market capitalization as an example of the mining sector and Nvidia or technology, I think is misplaced. I think they're very, very, very different asset classes. And I think they need to be looked at independently. Is Nvidia's chip technology in the context of what some people say is an incoming AI revolution such that they will be able to continue earnings growth at 30% compounded? If that's true, then their market cap may be justified. I have no way to know that. I have no way to know that. I work very closely with Albert Liu, who's the producer of the Rule Classroom, and he's a former semiconductor engineer. And he has now spent about 3 hours trying to explain chip technology to me, thus far with no success whatsoever. And so while I'm perfectly happy to talk to you about silver in isolation, I'm not prepared to talk to you about silver in conjunction with NVIDIA because I have no faith in my ability to understand or explain NVIDIA.
Rick, tell us about what you're working on right now. In the past podcast, we've talked about Battle Bank. Give us an update on how things are progressing there. Also, tell the listeners about any upcoming conventions that they can, meet you at or that you'll be attending, maybe in the UK and around the world.
Thank you for that, Phil. As you know, I've totally failed retirement, and I'm delighted about that. I talked about my wife's wisdom earlier. She will tell you that my mind needs to be stimulated or sedated, and working is better for me and healthier than drinking. So I'm extremely busy. As you,
I want to meet this patient woman because she must have a lot of patience.
Oh, she's very wise. Extending to wise cracks, of course, always at my expense and always warranted. So I'm doing a lot of things that I hope would be of interest to your listeners. On the natural resources side, I continue to offer your listeners, and all comers, in fact, the ability to go to my website, ruleinvestmentmedia.com, and list your natural resource stocks. And I will, for free, rank them, at least if I know them, on a 1 to 10 basis, 1 being best, 10 being worst. And I'll comment on individual issues if I think my comments might have value. The disclaimer here, no tech stocks, okay? No crypto, no pot stocks. I have to understand it, so it has to be natural resource stocks only. That's an absolutely free service, so of course it comes with a money-back guarantee. We also have the Rule Classroom, 15,000 members, well over 200 hours of instructional programming, including a 7-part session on natural resource investing and fundamental analysis. Free question and answer sessions every Thursday that I'm in town, including today. Absolutely free. That's ruleclassroom.com. Every 90 days, we have a deep dive, a boot camp. We take one subject and we spend 8 hours on it. Extremely intense. So intense that we give you more information than you could absorb in 8 hours. But we make the recordings of the boot camp available for a year, and you'll need it. That's not free. It's $99, but there's a full money-back guarantee. If for any reason you don't think you got your $99 worth, we give you your money back. This is an online phenomenon. By the way, I've said this on your show before. If you're the type of investor that buys the Sunday paper for the crossword puzzles and the funnies, don't come to the boot camp. This is not for tourists. We work you very hard. We just got done a 3-session piece on gold. The first boot camp was about gold itself and physical gold. The second was about the best of the best. the high quality gold equities that lead a bull market. The boot camp that we just got done was about the best of the rest, the market that we're in today. Very, very, very well received. About 1,500 students per boot camp. And then once a year, we cap it all off with what I think is the best natural resources investment conference on the planet, the Natural Resources Investment Symposium in Boca Raton, Florida, which you can attend live, which would be my preference, or if coming to Boca is inconvenient from Cairo or London, you can attend via live stream. In either case, over 4 days, we give you 46 or 47 hours of programming, more than you can absorb, but we make the recordings available for a year. Once again, whether you attend live or live stream, this conference comes with an absolute ironclad money-back guarantee. And then, of course, Battle Bank. Some of your listeners know that I've been involved in the banking business almost as long as I've been involved in the mining and oil and gas business. Not coincidentally, mostly banking, mining, and oil and gas. And for my sins, I've started a new bank, Battle Bank, successor to Everbank. Everbank is a bank that we built 1999 and 2000. We built the bank, built it to $28 billion in assets, and then sold it, and had no intention of darkening banking's doors ever again. But the people that we sold Everbank to migrated the bank to the extent that they left our 275,000 customers as orphans. They stopped servicing them, really. So we've started a new bank, Battle Bank. What's different about Battle Bank? Well, a few things. First of all, we pay you interest. There's $3 trillion in the United States in deposits, mostly checking accounts, that pay no interest. We think depositors are interested in interest. So if you open a high yield money market account at Battle Bank, we pay you market interest rates and allow you to write checks with no fees. We believe that Americans and people around the world, frankly, in a period of currency turmoil and a period of increasing globalization and trade, need to be able to save in more than one currency. So we offer certificates of deposit and money market accounts in 20 currencies, which means that you can save on a federally insured basis in 20 currencies rather than just one. The other differentiators, which I think your audience will be interested in, is that we believe that gold, silver, platinum, and palladium are good collateral. Americans right now can't borrow against their gold holdings with a chartered bank in amounts less than $10 million, which is beyond the reach of a couple of your listeners. At Battle Bank, you will be able, if you deposit your gold at Brinks, which is to say a depository that is audited, a depository that I know will be able to store your gold as opposed to steal it, we will offer you a margin line, in effect, so that you can access the capital that you have in your gold and silver without having to sell the gold and silver. As you noted, Kevin, before we went on the air, the United States has 4,000 or 5,000 banks, mostly community banks. And I like to suggest that Battle Bank is in fact a community bank, but a community bank where community isn't defined by geography. It isn't a neighborhood or a county. In fact, at Battle Bank, community is described by interest, need, and orientation. The gold community, the contrarian community, the self-actualized investor community is the community globally that Battle Bank is organized around. People who are interested in receiving interest on their savings, people who are interested in allocating their savings among currencies as they choose, people who believe that gold and silver and platinum and palladium are good investments, or that want to access the capital that they have tied up in their gold and silver with a credit line, should check out Battle Bank at battlebank.com. We will be open for public business the first week in January. We're trying out all of our systems now. We're fully capitalized. We're fully chartered. It's all systems go. But we'd like to make whatever operational mistakes we make with our own money before we make mistakes with your money. However, come January 2026, the doors are open. I should also note at Battle Bank, when we started Everbank, which, as I say, grew over 14 years from $0 to $28 billion, we opened that bank with no customer backlog. At Battle Bank, there are now 18,000 people on our waiting list. 3/4 of them are familiar enough with the bank's proposed products and services that they have told us specifically what services Battle Bank offers that are of interest to them. The upshot of that is I think that we open with an absolute bang.
Very good. Rick, just while you're on in terms of this, I think the last time it hasn't really changed very much. We've had an uptick in silver. We've had obviously quite an uptick in gold as well. We're still looking at a 85 ratio between gold and silver. Looking at all the graphs, it looks to me like silver should go parabolic from this point if we look back in history. What's your thoughts on that?
I'll have to defer to you on that. I'm not a technical analyst. My study of history suggests that what you say is correct. In my experience, going back, 50 years, what seems to happen in a bull market, precious metals bull market, is that gold moves first. The fear buyer establishes the momentum. When the price escalation justifies the narrative, which is to say higher prices seem to make the narrative come true in people's mind, and the generalist investor comes into the precious metals space, when that happens, historically, silver begins to outperform gold. If you look at your charts, by the way, Kevin, in the last 3 bull markets of the last 50 years, you won't need Rick Rule to tell you when that occurs. The move in silver.
Yes.
And I don't know why it is. I really don't. I've tried to figure out why, because that makes me a better investor, but I can't. I can just tell you historically that when the generalist investor comes down into the precious metal space, silver leadership changes from gold to silver, and it does it in spades. It may be that what we're seeing, the market action that we're seeing in the last 4 weeks, suggests that that time is nigh. I don't know.
Yeah, it's hard to say. So if anybody who's listening to the podcast who is interested in joining your 18,000 waiting list for Battle Bank, well, what should they do?
Battlebank.com.
Okay.
There's a deceptive tab that says join the wait list.
Okay, very good.
You hit that tab, you tell us how we might be able to serve you with our existing products and services. If you want to leave us a message about a product or service that you think might be of interest to us in the future or of interest to you, we'll happily do that too. By the way, for your European audience, I'm coming across the pond. I'll be in Zurich at the Precious Metals Summit in Zurich. I'll be up in Frankfurt at Kai Hoffman's conference. I don't know what that's called. Then I go up to London to a couple of conferences, including Mines and Money. So I look forward to any of my British or European audience that wants to have a cup of coffee, or better yet, a beer, in the month of November when I'll be over there.
Brilliant. Yeah, well, we'll be attending that, so we'll look forward to seeing you, Rick, in the flesh, as you say. And
see you in person.
Fantastic.
Okay, well, on that note, we'll say Rick Rule, of CEO of Rule Investment Media. Thanks again. It's always a pleasure having you on and listening to your musings. It's fantastic. Thank you for your time.
The pleasure's all mine. Thank you for the opportunity to have this discussion.
Yeah, and Rick, I'm going to leave you with the challenge that when we talk in December, which we've already planned, that we want 6 different stocks that you're going to pick for 2026 and onwards.
I don't do that, but what I will do, I hope, if the market hasn't run up too much by then, is give you 6 stocks that I'm either buying or have recently bought. I don't pick stocks for other people because other people's risk tolerances are different than mine.
Yes, I agree.
But what I will do is I will discuss what you might term as emerging conflicts of interest.
Very good.
we look forward to it.
Cheers, Rick. Thank you.
Pleasure.
So let's move on to our next guest. We're delighted to be joined once again by Sapan Ghai, CCO of Sovereign Metals. Welcome back, Sapan. How's tricks?
Yeah, tricks are well, Phil. Good to see you guys again.
Yeah, absolutely. So obviously, Sapan, since you were last on, we've seen a couple of major announcements from Sovereign that I guess really underline the company's progress and growing international significance. First, the exceptional first-year results from the Kasiya rehabilitation trials in Malawi, delivering a 5-fold increase in crop yields and proving that post-mining land can actually outperform traditional agriculture. I guess that's a big ESG and sustainability milestone and a major step forward for the DFS. And then more recently, Japan unveiled this $7 billion initiative to develop the Nacala logistics corridor, which directly supports the Kasiya project by enhancing its preferred export route and cementing its role in Japan's strategic critical mineral supply chain. Sapan, just give us some insight into both of these developments and what they mean for Kasiya's long-term strategy, your partnerships with the groups like Rio, and how they position Sovereign as a global leader in sustainable rutile and graphite supply.
Sure. So look, ESG has always been this term that's been bandied around by companies and a lot of junior mining companies in terms of just sticking a slide in their deck and saying we are ESG compliant and we look after the environment and all that. But we've taken it a step further as Sovereign, right? With a partner like Rio Tinto, you can't just greenwash these things, shall we say. You've got to actually do the work to show your ESG credentials. And in the case of Kasiya, what we did was we took farmers who were farming on the land that we are looking to mine and that we mined as part of the pilot test work in 2024. We trained them up in a way of farming called conservation farming, which is really just discussing the tilling, the mulching, and particular agricultural expertise that has resulted in them having crops, that are 5 times, even 10 times more than what they're used to. Now, why is that important for your local Malawian? 60% of Malawians depend upon subsistence farming, right? So they depend on farming their own crops for their own food. And Malawian families are, they have about 9 months worth of crops usually. And then for 3 months, you make do with what you can. I mean, that's the reality of the world we live in. Teaching them a way of farming that now they're producing 5 times more. What we're seeing is actually, yes, the farmers have plenty of crops for the entire year for themselves and their families, but they're actually selling crops to one another. They're creating these little micro economies. They're being able to get some cash to send their kids to school now. So there's massive knock-on effects on that whole kind of a social aspect of conservation farming. In terms of you mentioned the Japanese and the Nacala corridor. Look, the Nacala corridor is the way we're going to get the rutile and graphite onto vessels at the Nacala port in Mozambique. From there, those vessels can go anywhere, right? Western Europe, US, Japan, South Korea, wherever they're required. That corridor was refurbished about 25 years ago. But I think the Japanese have, and look, the Japanese were involved in that corridor, the likes of Mitsui and Japanese Development Bank, as well as African Development Bank, the World Bank, etc. They all assisted in actually financing the refurbishment of that corridor. And what the Japanese have particularly figured out is any critical minerals from the likes of Malawi into Mozambique, Zambia, that are required by Japanese industry will likely use that corridor as well. And so they have decided to put $7 billion aside, which isn't exactly a small amount of money, to help increase capacities, improve efficiencies. So we're looking forward to seeing what that actually means for us.
Yeah, absolutely. It's a real endorsement there, isn't it? So, one other thing I want to mention, obviously, we just heard from Rick Gruhl, and obviously with Sprott being, let's call them a significant, holding a position within Sovereign around just under 7% of the company. Obviously, for the US centric listeners that we bring in when Rick's on, just give us a little bit of an overview of Kasiya as a whole for anybody who doesn't know the Sovereign story.
Look, so what happened with Sovereign was Sovereign Metals between let's call it 2012 to about 2018, was looking at exploration, discovery, and development of graphite projects in Malawi. And around 2018, after the company had published a PFS on a small graphite project there, they were doing some test work to figure out, how much graphite can we actually produce? What does it look like? Through a little bit of pilot scale test work. Every time they produced graphite, they found high concentrations of titanium in the what they termed the tailings, so the waste streams at that time. And we asked the question, why is there titanium here? Normally you find titanium-bearing minerals, rutile and ilmenite, on coastlines. You don't find it inland, and you don't find it at the concentrations that we were seeing. So we spent some time figuring that out, and what we found out that we had basically tripped over the world's largest rutile deposit. Rutile is the highest grade, purest form of titanium mineralization that you can find within the earth. It's about 95% titanium dioxide naturally, and what we found was not only does this rutile continue within what we now term the Kasiya resource. So there's about 18 million tons of it there, but there's also 24.5 million tons of graphite within there as well. So today we stand with the Kasiya project being the world's largest rutile deposit, but also the world's second largest graphite deposit, all in one, all within this this material called saprolite, which is very free dig, starts from surface. We don't look to even contemplate what's below, kind of 25, 30 meters below the surface, because all of this free dig material just sits above that hard rock that then begins at around 25, 30 meters deep.
Japan, back in June, Toho Titanium, which is a leading titanium producer in Japan, validated Kasiya rutile as of a quality that can be used without any issues. Just for listeners, because a lot of people listening in, they'll understand gold, they'll understand copper. Titanium is a little bit out there in terms of mineralization. How significant was that announcement?
Look, so anything, let's talk about titanium as a whole. So most titanium or titanium minerals end up in the pigments market. So anything that's white, white paint, white plastics, white paper, it's white because of titanium minerals. Predominantly, it's a mineral called ilmenite that is upgraded into a what's known as a TiO2 pigment, which can then be used to create that white pigmentation. Rutile is a bit different because it's already 95% titanium dioxide in the ground or above. Where we hit pockets of 98% TiO2 quite easily at Kasiya. Because it's so high grade, it's very amenable to produce titanium metal, which is a different market, right? So that's titanium metal, which is used in aerospace, used in defense, used in anything from dental implants to hip replacements to your golf clubs to your new iPhone, right? So all of that is titanium because it's the it's the dare I say, a fashionable metal. It's a stronger steel but lighter than aluminium, but there's just not enough of it, right? Until we discovered Kasiya, which now means that that titanium demand can be met over time, over the course of the next 25 years of our initial mine life, which probably would expand to 40, 50, 60, 70 years if you wanted. When it comes to the Japanese, so aerospace grade, defense grade titanium that's used by the likes of Boeing, Airbus, Rolls-Royce, but also your underlying defense companies, that titanium only comes from two sources, or it came from two sources, I should say. Russia, where we no longer buy Russian titanium, and Japan. And that's why it was key that Toho Titanium, one of the largest producers of titanium metal in Japan, was able to take our rutile, put it through the steps that it uses to produce titanium metal, came back and said, yep, it bang on spec, this stuff can be used all day long.
Fantastic. And then you had the Japanese government last month even, committing $7 billion in development funding for a joint program with the African Development Bank, plus a little public-private impact investment through Japan's development agency. Now, Nacala, that transport corridor runs right past Kasiya. So you have a situation, don't you, now, where you have one of Japan's largest titanium companies validating the product, and also the country building infrastructure that goes right past your mine site. That seems to be a perfect storm, doesn't it, for the company?
It really does. We couldn't have. You can't ask for better end users than the likes of Toho Titanium, potentially Osaka Titanium, who are the other titanium guys in Japan. We already signed MOUs with Mitsui in the past. If you're not aware, the way Japanese industry tends to work is obviously there are not many natural resources within Japan itself. So the likes of Mitsui, Mitsubishi, Sojitz, Sumitomo, these large trading houses go out there to find the raw materials to support Japanese industry. And so Mitsui came to us when we first mentioned to the world that we had rutile, and asked whether they could help us place that rutile into Asia, specifically into Japan. And they would like to have a commitment of offtake. Obviously, as sovereign management, we like optionality at all times. So all of our offtake agreements have in the past and continue to be non-binding in nature at this point in time.
And then more broadly, in terms of just rutile deposits in general, I mean, I know the answer to this question, but I think it's important to reiterate it. How rare is it to find large rutile deposits which are commercially viable? And how important is it just in terms of the titanium market in general as a deposit?
Yeah, look, so we're the only, I think we're the second deposit to be found that you can actually say is a rutile dominant deposit on the planet. The first of it was Sierra Rutile in Sierra Leone, which has been predominantly mined out and now is held by a private company off the markets. I'll put it into this context. So rutile, if the titanium world had enough rutile, it would only use rutile. It wouldn't even think about ilmenite. The problem is that 5 years ago, the world was producing about 750,000 tons of rutile. Today, it's producing 450,000 tons, not because it doesn't want it, because the market doesn't want it. It's because there just isn't enough rutile in the world. Existing assets have been depleting. Most of the rutile you find comes from byproducts of ilmenite deposits. And when I'm talking byproducts, the average grade of rutile within those projects is about 0.05%. Right? We're talking so when we're talking about a 1% grade at Kasiya, it's significantly above the concentrations of rutile that you would normally find. I dare say that when we found rutile so inland that we started a bit of a titanium rush around the world, and many explorers, geologists have been trying to find very similar deposits. I mean, we're blessed because we're in a great country in Malawi. Number two, we have all the logistics available. Number three, we've done all the metallurgical work up front to know that this is completely commercially viable. So, those are the big boxes that need to be ticked. The commercial viability of these projects is just a massive point. When you're producing titanium, or TiO2 pigment even, the importance of not having too much chromium, not having too much uranium, thorium, all these other funky materials within your concentrate is super important. which harks back to exactly why that statement from Toho Titanium that our products can be used to produce the highest spec titanium metal is so important to us.
Yeah, I mean, last question from me, because we don't want to talk for hours and hours, but in terms of the graphite subject there as well, you put out an RNS not too long ago, basically saying that you can process this graphite cheaper than China, right, on a cost-effective basis. How is that possible? Is it because it's a byproduct? Is it because of the mineralization? What specifically allows you to process it so cheaply that you can undercut the Chinese markets that have basically forced everybody out of serious production?
Yeah, look, good question. So number one, we're the only deposit that we know of where graphite is a byproduct. I think most other graphite deposits or projects that are being developed, graphite is the only commodity within the mix there. We're lucky in that sense. What does that mean for us economically? It means all of my mining costs, initial processing costs, can all be attributed to mining for rutile. We see ourselves as a primary rutile company. We're a titanium company. It just so happens that every time we're going to be producing rutile, we're going to be producing a lot of graphite, a lot of high-spec graphite for a de minimis amount of cost. So we may as well produce it and sell it into the market, right? You're right, the mineralization also plays a part. We're the only deposit outside of China where the entire graphite resource sits within a weathered material within the saprolite. So we're not drilling, blasting, crushing, grinding this stuff. We're literally scooping it, washing the dirt off and selling it, right? That's how simple this whole process is.
Beautiful, beautiful.
Very good. Sapan, just tell viewers, what is the difference between ilmenite and what you have in rutile? As in, do you have some ilmenite that isn't weathered as well further down, you think? Or is, just explain to people what the difference is.
Yeah, we do have some ilmenite, but if ilmenite is 30 to maybe 60% titanium dioxide, it sells in the market for about $250, $300 a ton. It needs to be upgraded via smelting or roasting in order to become a synthetic or a comparable product to natural rutile. Our natural rutile is 95%, 96% titanium dioxide, and that can fetch prices today of about $1,600-$1,700 a ton versus the ilmenite. So if I'm packing a cargo train from Kasiya down to Nacala, I'd rather pack it with bags of rutile than ilmenite any day of the week.
Yeah, and my other question then is, regardless of how you pack it, surely the MOD and the DOD, which is now the DOW, so we're going from defense to war.
Yeah.
Surely they're going to be all over you like a rash, because ultimately the amount of uses of the titanium in defense/war is phenomenal.
It is, and look, as soon as we knew we had rutile, we had everyone in the titanium world descend upon us, and that was at a very early stage. That was back in 2022. Since then, all the work that we've done to show that it's not just economically viable, but it's the returns are phenomenal on Kasiya, and then we've proven that it can work to produce the highest spec titanium products as well. And what we've done on the graphite side has just meant, you can imagine the good and the great within the critical minerals sphere. All either know about Kasiya or are looking at Kasiya at the moment.
So have you had comms with the Ministry of War now, or the MOD, the British government?
Look, we're under NDA with a lot of these companies, but it's suffice to say that anyone within those spheres, we're in discussions with.
Okay, so based on the figures that are out already in the market, just so people have a grasp, what is the the sort of in situ value of this metal and subsequently the graphite?
Oh, look, in situ, you're talking kind of $35 billion worth of material sat there. Yeah, our OPFS or our optimized PFS that we released in January this year, the headlines are easy. We're going to be the largest producer of rutile. We're going to be the lowest cost producer of rutile. We're going to be the largest producer of graphite and the lowest cost producer of graphite. Full stop. We're going to be doing that for 25 years with an average annual EBITDA of over $400 million at very conservative prices. Kasiya is going to churn out about $200 to $300 million a year of free cash flow a year. And I'm saying 25 years as if it's a long time in the context of Kasiya. But after those 25 years, we'd have only tapped 30% of the known resource. So actually, we're talking potentially a century of mining of Kasiya here, for both titanium and graphite. Now, importantly, I mentioned the resource, and I think if you look into our annual report that we announced, I think it's page 14 that we have said that we are expecting an upgrade to the mineral resource estimate in the coming weeks. Dare I say, coming days now. But
don't say too much, Sapan. Don't say too much.
But look, Kasiya's open in all directions. We just don't know how big this thing could get.
That's right. I mean, it's as big as Manchester, which is a bit worrying, especially as they have two football teams there as well.
Yeah.
So.
For your US viewers, I mean, it's 5 Manhattan Islands worth of resource right now, and set to grow.
So I suppose my last question is, how the hell are you currently valued at what 1 year's free cash flow will be?
Gold is flavor of the month at the moment. We're not something simple like copper. I think, if you, when you ask Rick about us, he'll always say most people can't spell rutile, let alone know what it is, right? So for us, it's a case of getting the market to understand the real value proposition here. We could be any commodity and we could be in any country, but if you look at those economics, a $2.3 billion NPV, 27% IRR. I mean, that takes a lot of boxes on that front. And as I mentioned, those are based on conservative price estimates. And yes, there's global inflation that keeps having an impact on costs, but inflation always runs down to commodity prices as well over time. So I would say have a look at what our optimized PFS outcomes were.
Yeah, and I think just for UK listeners, you need to be looking at the price action that we've had in GMET, the price action we've had in Greek and gold. We just really haven't had it yet in sovereign metals. But these are the triad or the trinity that Charles has been banging on about for a couple of years. We just haven't had the uplift yet in the sovereign metals, but it's coming. I'm sure of it. It's coming for many, many reasons that we've just talked about. So, yeah, thanks for coming, Sapan. And we look forward to speaking to you in from what you're saying, the very near future about some upgrades in the things that we're talking about.
Yeah, thanks for having me, guys. And we'll be in touch very soon.
Okay, so let's have a look at some of the market movers and shakers of the week. The best mover I've got on SharePad, according to the last 5 days trading, is GenFlow Biosciences, GENF, up some 165%. Just talk us through that news, Kev, because I think there was an announcement I believe it was on Thursday, where they talked about an update related to the subscription, basically, where I think that there's an alternative that it had raised these £444,000 via an allotment to Eric Lear of about 40 million shares at about 3 pence each at an issue price of 1.1 pence. So just talk us through what that meant and why the share price moved up on that news.
Yeah, I think it was twofold, really. I think it moved up because it was a better deal. And if you look at the share price prior to all of this shenanigans happening, if you like, it was 1.6, 1.7, 1.8p. And then I think it was pretty much driven down so that they could raise at a lower level. And then the shareholders basically rebelled and said, we don't want you to take it with one of the brokers. We want to do it ourselves. So they did it themselves, the whole shareholders. So those shares are going to be in sticky hands. And then on Friday, Genflow and Eric came out with very interesting news about the dog product in terms of the longevity. So I think it's probably, I mean, as we speak, it's trading about 2.4, I think 2.5. I think it's just at the price it should have been, but it was, it was knocked way down. Can it go higher? It can go higher now on news. There's no doubt about that, I think. But that's basically what happened. Broker came in, tried to get the shares cheap, and then subsequently the shareholders came in and said, no, we can do a better deal for that. They've all got warrants as well, so they're all going to be in sticky hands, I think. So it's it's good news for the market when you think about it, because the broker cheap raise has been cast away, and they're basically saying, no, we're the shareholders, we can do this. And I think we're going to see this more and more. I think it's going to keep happening.
Good. We saw ALBA Minerals up some 51%. Obviously, they gave an update at the end of August. I think the sort of market is finally realizing that obviously they've got two projects. They've obviously got the first one in the main one in Wales, the Clogau project, but they also have the Motzfeldt critical metals project in Greenland, whereby the 2025 field program was successfully completed, meeting all those key exploration objectives, and obviously engineering consultants for mineralogical and metallurgical test work program on the Aries deposit bulk samples have been selected. So what do you make of that rise?
I mean, it has only just begun, as I sometimes say. I mean, we're talking about a market cap still less than 4 million. The Welsh gold's probably worth more than that. And at the end of the day, they've also got part of GreenRock, which we're big fans of, and then subsequently their own project now in Greenland. Looks like it could be massive. It's got many multiples of the rare earths that, say, Cobra have in Western Australia, from initial inquiries, and it's probably about a fifth of the value of that, and that's not their only project, but I'm just doing a slight comparison in terms of valuation. So I think it's got a mile to run. I think it could be 2, 3, 4 times the value of this that it is now, and not be expensive. So yeah, I think that it's got a long way to run, and we're in the same boat with Bazant. Bazant Resources had a good week last week, had another good week this week. We're waiting basically patiently now for the financing to come through. And if it does, it should be worth 2 or 3 times what it is now and still be relatively cheap. So it's a similar thing to you'll hear or you heard about Sapan in saying, he's got 1 year's free cash flow is the market cap. Well, think about Bazant having maybe a third of its value is 1 year's cash flow. It's like bizarre, in terms of valuations. Even if Bazant went to the same valuation as that, it would have to go up 3 times from here. So it's highly undervalued. But what I'm seeing, let's look at the overall picture, is what I'm seeing is that the resource stocks are now starting to have liquidity put into them, and we're now seeing the valuations coming up fast to the not real values, but really what they should be worth, and they're nowhere near it yet even, but they've started to move. And then you look at another defense stock. We've got ALRT, Defense Holdings, good announcement on Friday as well, started to move back up again. There was warrants put into the market, which I think dashed it for the last week or bit. But again, I can see big movements in that moving forward. So let's see what happens.
Definitely, I really like that one. It's as you say, there's good announcement on Friday for Defense Holdings, but that's up some sort of 30% on the week. But it's consolidating really well, hasn't it? Because obviously it rose to the 4.7, 4.8 levels, and then there was a big drop off. But as I think, as Charles said last week, it's going to be a bit of a roller coaster ride, that one. Anything else? Cloudbreak, Discovery, CDL had another good week, up some 20% around the 1p mark. African Pioneer as well, talking about Bazan, they had a good week. They're up 20%. What do you make of that? I mean, kind of almost feels like a little bit of a re-rate, as a bit of buying pressure on that one.
Yeah, well, African Pioneer, if you look at the net asset value of the mining license in Namibia at Ongombo, plus First Quantum deal in Zambia, plus Botswana licenses, I think that has an NAV of about 0.25. I think it's worth about a quarter of what the net asset values are, even if those products, or sorry, assets don't get moved forward. It's a nuts valuation. In some ways, it's like Bazan. It's crazy. It's just crazy, and I'm looking at these and saying, it has to move. It just has to. The other one that I think is very undervalued is Extract Resources as well. I was speaking to Colin during the week. There's a lot going on there. There's a lot going on in all his companies. But I see Extract is moving forward as well. The other
and
one,
Galileo as well, is another one that seems to have just fallen off the radar as well.
The question is not just the ones that are moving now. What do we think are the next ones to move is as important as what's moving. I have my money on African Pioneer. I have my money on Jubilee. I think Jubilee's been sold down way over the top, and I can see Jubilee being worth a significant amount more than now. I think it's got 3, 4, 5 times more in it from here at very minimum, just with what they've said they're going to do in Zambia. Yes, as you said, Galileo, you've got Extract. The other one that I really like, which is now taking us away from the resource, and maybe you have something to say about this, is Incanthera. What's your thoughts on Incanthera?
Yeah, I mean, the product, I've been using it. Suzanne kindly sent a care pack out, which I think you also said that you'd received as well. And I thought I think the product's excellent. It's premium. The packaging's excellent. Obviously, this all hinges on the ability to sell these first 100,000 units, and they're using a D2C model now, aren't they? Via their website. They've obviously got a lot of socials out there with influencers and those sort of like Instagrammers. I was meant to attend they did a proactive evening. Unfortunately, I couldn't make it due to work commitments, but I wanted to catch up with Suzanne and Tim. But I think, from what I can see, it looks like the product's rolling off the shelves, and let's see what the update is. I mean, it's all down to those numbers. How can they, will they shift those 100,000 units? I think their target was the end of Q1 2026. It'd be nice to see an update saying that they've sold them.
Yeah. The thing is, I think this is a double whammy, right? Again, what is the IP worth of what they have in the product? So you've got the product, and then you've got what's the IP worth of what's in the product. In my view, if it works this way, great, they'll still carry on. I still think they're going to go for a big guy where, no matter who it is, they're going to license it to somebody and let them run with it as well as a product. And that makes ultimate sense. And then what are you talking about? You're not talking about a company that's worth currently £3-4 million. In fact, probably a bit less. You're talking about a company that's worth tens of millions, if not hundreds of millions. And that's my view. It hasn't changed, even though the price has gone from 30 down to 2.5, 3p. I still think over the next period of time, Incanthera is going to be one of the big gainers. I don't know that it's going to go massive before Christmas, but I've got it on my list as one of my stocks of 2026. I think it's going to come good, and it is a big risk, as you say, because ultimately, if it doesn't work out, where do they go? But this
I think their big challenge now is the price point. So from what I can see online, it's around the 150, 160 pound for some of the eye serums. Okay, that's not a cheap product. They have to find their market. Is this aimed at 20 somethings who haven't got the cash to spend on that amount of cash to spend on it, or is it aimed at the 40, 50, 60-year-olds who maybe have got that sort of amount of money to spend on it? That's the challenge, is finding their demographic.
Yeah, no, I agree with you. I agree. They've got to find the market. They've got to find that niche group of people. If you have 1,000 good customers and they're all ordering 4 or 5 products a year, you've got 1,000 plus people ordering 5,000 products. You've got a business just on that with the price point. You then have to move that up to 15 to 20,000 people using it. We're not talking about big numbers here for this to be worth tens of millions. And I think it's going to be a snowball rolling down the hill. My wife's used it. I've given it to Jonathan Swan's wife. She really likes it. Another lady who was that we met there in England, she's tried it. She says she really loves it as well. And I think it basically does have an impact on people's skin. So, yeah.
Okay. I think we've talked long enough there. We've had 2 action-packed show. Obviously, Rick Rule and Sapan Ghai on as guests. Always good to hear their insights. And I think if you like what you've heard, please do subscribe. Hit the bell icon for further notifications of future episodes. And have a great weekend all.
Yeah, and as a last comment, next week I think we're going to have Active Energy on the podcast. That's one to find out about and do some digging. But I'm pretty excited about what they're trying to do in AI centers in Dubai. So, yeah, have a great weekend, and we'll look forward to seeing you next week.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.